So next up is the property strategies, and specifically property trading leads. Now there's a couple of things to consider with the strategies. What is it? So what is property trading leads? Where the money is, so where's the value in this particular strategy, and also who's it suitable for. So what is property trading leads? Well, specifically, this is generating inquiries from motivated sellers, people that want to sell their properties, want to sell their homes, and that need something other than just price typically. So maybe they're selling quickly because they're looking to relocate, or maybe there's financial difficulties or health difficulties, unfortunately. Sometimes it's a probate property, it's a property they've been left that they're no longer wanting or considered, or just came out of the blue potentially as well. It might be an investment they purchased that they want to sell. It might just be a home that they're downsizing and need to move into a smaller property. There's a whole host of reasons why people might sell, a whole host of reasons why people are motivated to sell for speed rather than price. And specifically, they're very often the types of leads that you would want to generate and sell them to other investors, other companies that are looking to purchase those types of properties. So this is a great strategy if you're wanting to get started without any funds or limited funds, and you don't necessarily have the potential to buy those properties or don't want to buy those properties, but you can make very good income, very good cash flow by sourcing property leads and then selling them to third parties and other investors. Now in terms of value, you'd probably derive anywhere from £5 to £50 a lead, £5 at the very lower end, depending on the quality of the lead, £50 usually if it's a good quality lead, but not necessarily qualified to any form of level. If you then go on to qualify those leads, and by qualify I mean sort of speaking to, getting an indication a bit further about their reasons for sale, maybe what price they're willing to accept, maybe a bit more detail about the property, you can then go on to another trading strategy of actually selling them as a package deal rather than a lead. But this will give you a very good insight as to a potential strategy really to get started if you've maybe got limited funds. And this is a strategy that we go into much further in our VIP training course as well. Next up, we're going to be looking at property trading deals. So this is a level up from property trading leads. This is where you've negotiated the property a bit further. So very often it's a case of you've generated a lead, somebody wants to sell their property quickly, you've maybe gone and viewed the property, or you've spoken to the homeowner and you've got them to a stage of signing up to sell their property for a certain price. Now it's at that stage you then want to speak to other investors to try and get the partnership aligned of obviously a seller wanting to sell the property for X price and a buyer wanting to buy the property for X price as well. Your role effectively in that deal is pulling the both together. So finding the deal and finding the investors to work together to purchase that property. That allows you to make a very good income without physically having to buy the property. Not only that, but property sourcing, property deals, packaging is a great strategy to use to combine with other companies. So if you're very good at maybe working with investors and you have an investor list, or you work in creating an investor list, and you're very good at networking, you can partner with other companies that have deals. You don't have to physically do both parts of that equation, and vice versa. If you go out there and find the deals, you don't have to physically go out there and find the investors as well. You can partner with another company that has an active and buyer ready list that wants to buy those types of properties you are sourcing. And there's a whole host of nuances that play into this. You can go and source property deals that are just buy-to-lets. You can source service accommodation property, you can source refurbishment deals, development deals, land sites. There's a whole range of deals that can kind of come into this as a potential strategy, but ultimately, fundamentally, the strategy is finding deals, motivated sellers that will sell their property for a price that works for an investor, or terms as well that work for an investor to buy that deal. Now, this is a great strategy, again, if you're starting out with not much funds, and also if you don't want to build a property portfolio for whatever reason for yourself, but you want to earn an income and build a property business, this is a great strategy to do that. In addition, in terms of income, typically sourcing fees range anywhere from about 2,000 to 5,000. They can sometimes even be a percentage of the deal. So if you're looking at larger portfolios or land sites, they can be a percentage of the deal, maybe 1% of the deal. So on a £5 million project, especially in areas of South London, larger projects, portfolios even across the UK, that 1% would be £50,000 as an income. So you can see it's a very good income generating strategy. Most typical deals are around sort of 2,000 to 5,000, and they are deals that you can find usually in any area of the country, just a case of trying to find those right motivated sellers. And that's property sourcing or deal packaging or property trading, but ultimately finding sellers of motivated, or finding motivated sellers of properties to match with investors to buy them. Lease to let is another strategy you can do if you're limited on funds. Now, ultimately with lease to let, you do want to have some funds in the bank. We usually suggest up to around sort of 10,000 in the bank to get started with is a great starting point, but you can do it potentially less than that, 5,000 or a couple of thousand or so. And that's usually getting started money. That's the money you require to get that property up and running. Now, effectively, what lease to let is, it's a form of arbitrage between yourself, a owner of a property, and an end tenant of a property. Now, those owners of the property could be a homeowner, could be an investor, and those tenants of the property could be an individual, it could be a group of people in the state of, let's say, a HMO where you have individual rooms that you rent out, or it could be a company. You maybe find a property to rent to another company. Ultimately, you're a middleman, you create some form of arbitrage, and it's effectively like setting up a letting agent or a managing agent. The difference here is that unlike a letting agent where you might charge a percentage for managing the deal, very often lease to let owner operators would usually achieve the benefit and the difference between what they're paying maybe for the running costs of the property into the landlord as a lease on the property through to what they'd achieve on rental income for the property. And that margin can sometimes be very high. It can be £500, £1,000, even more, depending on the size of the deal, per month on that particular property, depending on how you manage it, depending on what you're paying. But those sort of incomes can be obviously a lot higher than maybe a 40, 50 to £100 a month rental income or management income, as you would get maybe as a letting agent. So lease to let is great as an income stream. You do need some money to get started, and there are some things to kind of consider. It's very difficult to go into that in a short video, but we go through that in detail in our VIP training of the different things you need to consider as lease to let as an owner operator. But ultimately, things like, is the owner of that property able to rent it out to your intended end use? So if you want to rent it as service accommodation or you want to rent it as a HMO, is that property, is the lender, if there's a mortgage on that property, is the seller or the owner of that property able to do that structure? So there's things like that that you need to consider to make sure it's set up correctly. But lease to let can be a great income stream. Reason why I say a couple of thousand to get started, because very often when you're taking on a property, it might be unfurnished and you might have a requirement to furnish it, depending on who you're providing it to as an end use case. So it's important to kind of consider that. Sometimes there's marketing costs to kind of get started, but very often you can find these deals with free methods, Gumtree, Spare Room, working with other letting agents to find the deals can be a great way to kind of get up and running. And this is very often a good strategy if you're wanting to build a property business. You don't own the property, you don't create a portfolio, you effectively go out there and create some form of kind of managing agent where ultimately you achieve a slightly better income because you're getting an arbitrage there of what the rental income is versus what you're paying out on the running costs. So I hope that helps. Hopefully it gives you a bit of an insight as to what lease to let is. Next up, joint ventures. Now, joint ventures are great regardless of your starting point in property. They can be suitable for investors that have got a couple of million to invest, and they can be suitable for investors that are starting out with nothing. Now, there are things to consider with joint ventures. There is certain legislation around joint ventures and who joint ventures are done with. Again, it's hard to go into the detail of this specifically in a quick video. We do cover this in detail in our VIP training, but ultimately what I say with joint ventures is you can start with a blank piece of paper. Look for really the criteria of who you want to work with. So if you're maybe starting out with limited funds, your main criteria is probably somebody that has funds to invest, and you can bring the workload to the table. So you can go out and find the deals, you can manage the refurbishments, you can manage the negotiation of the property and the resale of the property, and work with somebody that's going to fund that particular project. Now, ultimately, the legislation and the requirements of how that is set up will dictate what the terms are of that joint venture agreement. But you can work in joint venture, you can work in partnership on that structure very well. We do that a lot of times with our deals, especially our development deals. It's a fantastic structure to get started in property and to grow a property portfolio or to grow a development business with buying, refurbishing and selling properties whilst working with other partners that have a different skill set to you. So if you have the funds, you can work with partners that have the skill set. If you have the skill set, you can work with partners that have the funds. It can be a very good marriage. In terms of income that you can derive from it, it depends. Again, it's a blank piece of paper. Very often we see joint ventures are done on a 50-50 basis where you're working with a party and you're both providing something to the table. It doesn't have to be financially, it could be a split of skill sets, as we mentioned before, or a split of knowledge or contacts. But ultimately, it's a blank piece of paper. You can create a joint venture that works for you in whatever shape or form. The best joint ventures that we see work are usually 6 to 12 month projects, usually developments, so buy and sell can work great for joint ventures because they're shorter term. It's a quicker in and out process for both parties, but ultimately they can work in any way, shape or form, however you kind of wish. But joint ventures are a great way to grow and build a property business or a property portfolio. Be a great income generator as well.